Sorry, Kiana, I'm running a little bit late. Can you hear me? Oh, good. You can hear me. Glad you could make it this evening. And the sound's a little bit better. So sorry. I'm just now going through. This is one of the first nights where I've done the streaming through YouTube and Facebook Live. Anyways, it looks like it's just going to be you and I in attendance this evening. So my assistant did not send out invites to everybody this week. So if you don't mind, we can actually curtail this to your experience and what your needs are. Just to give you a feel for what I like to do, I like to give you an overview of the whole mortgage industry and what it takes to actually what goes into creating a credit score that really weighs more heavily inside the mortgage world. So I don't know if I shared with you, but and not to bore you with my resume, but before I got into selling real estate about 7 years ago, or back into selling real estate, I should say, I spent over 20 years in the mortgage business. So that's how I learned to dial into a lot of the different programs and grants and things like that I help connect people with. So during that time in the mortgage world, I learned a lot of techniques that I coach people on to get a quick bounce in their scores that work favorable with a lot of the credit scoring models that are used in the mortgage world. So with that being said, I'll just dive right into it. Um, so I always say, who is this program for? This is really designed for people that are looking to get their credit scores from anything from the low 500s to mid 500s up into the 600 credit score range. It's not really, I don't focus a lot on getting people up into the high sevens, things like that. I just try to get people to the point where they're not overpaying for credit. Okay. And I'm finding that right now, for most people, if we can get you up in that mid 600 credit score range, I find that you may not get the best rates, but you're not going to dramatically overpay. Hopefully that makes sense. All right. Uh, Oops. Like I said, most of the people that tend to specialize or at least curtail a lot of the questions this evening are between 5 to 600. A lot of times, if you know of people that don't have any credit, this can work for them too, because there are ways to get people done with have no credit right now. Also go over the different things with regards to bankruptcies, repossessions, collections tend to trip a lot of people up. But generally, I just like to educate people on how the mortgage world and the credit scoring models within the mortgage world and those algorithms, how they translate to the overall credit picture, because it's different than what a lot of people think of. So it's a lot different than the automotive industry or that credit world, or just even the free algorithms that people tend to get, which I do like them. I know a lot of people in the mortgage world don't like the free credit scoring models like Credit Karma or Credit Sesame. I personally like them because it empowers people. It gives you control. It gives you a snapshot of where your credit is. Now, I do find that those free scoring models are not, the algorithms are about, on average, maybe about 20 points lower than what you might get in the mortgage world. So I tell people, please don't look at those scores as gospel. Sometimes they can be a little bit misleading, but they're free. It doesn't count as an inquiry. So it's just, in my mind, it's a good place to start. Okay. And so thank you. I think you sent me your scores yesterday. So I'll go with what we have there. So why do I do these webinars is always a question that comes up. I tend to work with a lot of renters, and I get a lot of enjoyment out of teaching renters how to basically purchase homes with very little money out of pocket. And unfortunately, especially after COVID, I'm finding that there are a lot of people that had some credit, their credit bruised or dinged up over COVID. Especially with the way that people were laid off for a decent stretch of time. So, and I also see a overpaying for credit. too. So that, coupled along with a lot of the misinformation on how to repair it, that's where I started doing these webinars about a month ago. So now my goal, like I said earlier, is to try to get your score up into the 600s. But I can tell you, anytime somebody walks away from one of these webinars, you should be able to get your credit score up at least 60 points in 60 days. So what we're going to do this evening, in addition to show you how the mortgage world works and how to fit into that model from a credit scoring standpoint, I also want to show you how to identify quick things to get a quick bounce in your score, okay, outside of some of the tools that I'm going to show you as well, okay? And then we can possibly set up what I would say a reasonable timeline, because the most popular question is, John, this is always great, but how long is it going to take to do it, okay? And I can tell you sometimes, depending upon what kind of baggage is on your credit, it could happen as quick as 60 days. If the scores are maybe in the low 500s, it could take as long as 90 days. But it really depends on what items are out there, okay? And what is possibly dragging them down and how recent some of those derogatory items were put on the report. So, and we'll go over that in just a few minutes, okay? Any questions so far? Okay, all right. So start going over the actual credit industry as it relates to the mortgage world. So the credit industry itself basically is comprised of, there's actually more than 3 credit bureaus, but there's only 3 the mortgage industry puts weight on right now. There's TransUnion, Equifax, and Experian. And for the most part, they literally have hundreds of algorithms out there. So the mortgage world is the only industry that uses a standardized scoring model, okay? And they use what's called the FICO scoring, either the 2, 3, 4, or 5 model. Now, if you go into the automotive world, there are almost 100 different scoring models out there, okay, when you look at all 3 credit bureaus. And but the mortgage industry only focuses on the one FICO model, okay? So that's why that model is a little bit misleading, because sometimes if you go to some of those free sites, like I said earlier, your scores are going to be off from that. So typically those will be about 20 points on average higher. Sometimes if you have what they call a thin credit profile, and that's just a profile that doesn't have a lot of credit. So if you only have 2 or 3 lines of credit, or what they call trade lines, and you have maybe a late payment or a derogatory showing up on just one item, it can swing dramatically, okay? So the thicker or more items you have on your credit profile, the less volatile it will be when you have one item that happens to have a derogatory mark, okay? But in the mortgage world, they typically are going to look at your middle credit score, okay? So you're going to look at, like I said, they look at TransUnion, Equifax, and Experian. They're going to put all of their weight on the middle credit score, okay? So if you have a 550, a 600, and a 650, they're going to use that middle 600 credit score, and that's what they're going to gauge everything on, okay? So, so typically that's what we're focusing on. So not that we don't care what the lowest score is, but we're just not going to focus on it, okay? So just by doing some of the tools that we're going to talk about this evening, that lowest score will come up with the other ones. But again, it's just not anything we want to really hang our hat on, okay? So most of the creditors that you have will typically only report to 1 or 2 of the 3 credit bureaus, okay? So for example, if you have a car loan, they're probably going to only report to either TransUnion, Equifax, or they're only going to report to 2 of the 3 typically, okay? Some of the companies, one of the companies that I'm going to recommend this evening for credit building tools actually will report to all 3 credit bureaus, okay? So it's important when you look at tools to find out how many bureaus do they report to, okay? And how much your score get a bounce out of what we're about to do. So, so again, we're going to look to isolate quick opportunities where we can get a quick spike in your score. either your middle score or if your higher score needs work. So we're going to focus on those two, the highest one and the middle one, just so we can have both of those above. Typically 600 is the minimum threshold. We've got a couple of programs out there. One is a down payment assistance program, and the other one is a grant where they will give you a mortgage with your scores as long as they are above 600. Okay. So 2 of the 10 programs that I describe in my weekly webinar, the top 10 ways to buy with no money down, 2 of those programs will work with people as long as your scores are above a 600. Okay. Let's see, next, what goes into the credit score? Okay, so obviously payment history weighs in on a credit score. So, okay, so do you have late payments with regards to 30-day lates, or are they showing, how serious are they? 30, okay. And how old were they? Were they recent or a few months ago? Okay. All right. So typically, the more recent, obviously, the more damaging it is, or the more of an effect it is on your credit report. I find that once it gets over 90 days, you'll see that things will start to rebound a little bit. And then once it hits 6 months, not that you'll get back to where you were, but they don't penalize you nearly as much. Okay. So the most important thing is to bring those things current as soon as possible. Now, some of the programs are sticklers when we get down to the 600 credit score. They can be sticklers with regards to any late payments within the last 12 months. Okay. So there is one program that's an FHA product with it. As long as it's above a 600, we're good. So as long as we have a good explanation and and it's an isolated incident, we should be okay. Okay. So, oh, okay. Now, who is the car company? Okay, so Allied's a pretty good company, so that's worth taking a shot at it. So I had somebody a couple of days ago that actually had a late payment removed from Toyota. So it's certainly worth the phone call. And sometimes it's actually and it's actually a good idea to just be honest with it. Hey, I didn't realize this. I totally had shouldn't say it, but a senior moment or whatever you want to say, and just forgot about it. And you'd be surprised. Sometimes they're going to say, you know what, I'm sorry. There's nothing we can do about that. Be insistent. To say, would you mind? I appreciate you, but can I talk to your supervisor? Okay. And so if you go up that chain, you might get a sympathetic ear, especially if it's just an isolated incident. Okay. So never hurts to ask. All right. So if you do have any collections, please do not pay. Okay. But even down the road, do not pay collections off. Okay. Especially if they're over a couple years old. All right. So, and I'm going to go over more detail on that later, but I just like to harp on that to drill it home. So a lot of people don't understand. If you have an old collection on your credit report and you pay it off today, chances are your credit score is going to go down, okay, for a good 60 to 90 days, and then it'll rebound and probably drift north a little bit. But for the most part, that can have a negative impact immediately, okay? So 35% of your credit score is based on payment history, okay? The other item that we want to focus on is credit utilization. So if you do you have any credit cards in your name right now? Okay. What's the balance on the line of credit, and what's the limit right now? Okay. The balance. Okay. It's so the balance is about 900 right now. Oh, okay. So you've got a very, what they would call a very low utilization. Okay. So another way that your credit score is impacted is based on what you owe versus the amount of credit that you have. Okay. So if you have $1,000 line of credit and you only owe $70, you really only have a 7% utilization. Okay. So ideally, you want to keep your utilization under 30%. Okay. I always tell people that sometimes having a little bit on your score is going to have a higher score than zero. Okay. So try to leave a slight balance. So I would just say you're at 70 right now, just leave it where it is. Okay. Or try not to charge it up or use more than 30% of it. Okay. Oh, nice. Okay. So she's got a $25,000 limit. So that's a good friend to have. Oh, good. Good. Well, where was your, let's go back to that $1,000 credit limit. Where was your limit? Where was your balance before the 70? Okay. You're gonna get a good bounce out of that. I'd be surprised if you don't get a good 20, 30, maybe even 40-point bounce in your score just out of that one maneuver. Okay. Now, getting yourself, and one of the techniques that I'm going to talk about a little bit is doing exactly what you're doing, and that's becoming an authorized user on someone else's card. Now, typically, someone that has a $25,000 balance, that they probably pay their bills on time. Okay. Uh, you want to make sure that they've never had a late payment on it, and that they keep a very low balance on it. Okay. So, in order to get as much benefit as you can out of it, and chances are, if they have a $25,000 limit, they probably had the card for several years. So, I'm assuming that's the next thing, length of credit history. So, if they put you on that card as an authorized user and it reports the way that we would hope it would report, you could get a very big bounce out of that. Okay. Now, the only hesitation I have, and I usually go on this in another slide, but I'm going to go over it right now since we're on topic. The credit being added as an authorized user it's a great tool, but about 5 years ago, if not maybe longer, they changed the guidelines. Okay, and what they did is, because a lot of people were adding people to their cards, and you would get all of that credit juice that was built up from that card issuer that would gravitate to your credit report. Okay. So about 5 years ago, the credit reporting agencies were supposed to make a change where they were only going to give you as much benefit of that card as the day that you began. So basically what I'm trying to say is, technically, if they entered the card or entered you as the authorized user with the start date of March 2023, and that's your open date, you won't get as much benefit as you think. Okay. Now, I still recommend it because the the credit card companies don't do it that way 90% of the time. Okay. So what happens is, typically you'll have somebody that's just a phone jockey for the credit card companies, and they will actually just go ahead and add you as an authorized user. They don't typically go in and put the start date, the date that you're being added. And what happens is, you're going to get the open date from when they originally got their card. Okay, does that make sense? Okay, so here's a perfect example. I had a young lady a few months ago. She asked grandma to add, hey, grandma, can you add me to one of your credit cards? Well, grandma had an old Sears card that she opened up in 1976. And So, and I understand it. Everybody's held to some standards or being timed. So a lot of these people in these call centers just quickly add somebody on the card and boom. Well, this lady she wasn't even born in 1976, but it showed up on her credit that it was an open date of 1976. Okay. And the reason it happens like that 90% of the time is because it's actually, from what I understand, it's a manual entry. That person in that call center has to manually go back and input that date. And unfortunately, human nature kicks in, and 90% of the time, people just get lazy and just add them to it. Okay. But it's the time that I don't explain to you this that they do it the right way. Okay. So chances are it's going to be a great maneuver for you. Okay. But don't be surprised if it doesn't go up 40 or 50 points. It may go up only 10 or 20. Okay. That could happen. All right. But still, it's a great move. All right. The other thing I tell people is outside of the utilization and not keeping a zero balance or trying to keep a few dollars on it, do not close any accounts. Okay. So sometimes if you have a thin credit profile and you close an account, your scores will tank. Okay. And sometimes if you have a thin credit profile and you have a car loan, by paying that car loan off or something like that, you're going to lose a trade line. Your scores will go down as well too. Okay. It may do the opposite of what you think it does. Okay. So I'd just like to share that. Well, you can pay things down. Do not pay them off and do not close them. Okay. What we don't want is to take a chance of that negatively impacting your score and pushing it down and unwind some of the other things that we're doing. Okay. And not that it would unwind it, but it would certainly bring things down and it would offset all that work we're putting on the other areas. Okay. And then obviously it goes without saying as far as, don't let anything else show up late. Pay everything else on time. So I always like to spend a few minutes and go over some of the big items that tend to trip people up lately. Okay. And those are student loans, repossessions, bankruptcies, and collections. And I understand the vast majority of these items don't affect you, but just the same, I'm gonna touch on them briefly. Okay. Do you have any student loans? Okay. So student loans for most people are still in forbearance. Are yours in forbearance? Okay. Okay. So a lot of people were, automatically, the government took a lot of student loans and put it in forbearance with COVID. So there are a high percentage of people that did not fall into that category. Okay. So it sounds like you are on an income-based repayment plan right now. So now a lot of the programs work off they a lot of programs don't accept income-based repayment plans because they're artificially low. Okay. So if you don't mind my asking, how much do you owe in student loans right now? Just a rough idea. Okay. So a couple of years ago, a lot of the programs were taking 1% of that. So 1% of 52,000 would be $520 a month is what they would count against your income. So, I mean, that's like having another car. So that was really, it's very, very challenging to start to qualify for any type of financing when you start adding, that plus a car payment and a few other things. Uh, so a lot of the programs now are using a 0.5%, which would be $260 a month, which is still a fair amount of money. Now, on your income-based repayment plan, I mean, I've had people as low as sometimes they'll say $0 per month. Sometimes it's 10, 20. Any idea what your amount is right now? Okay. Right. Okay. Okay. All right. So any idea what it was before COVID? Were you on an income-based repayment plan then? It was zero. Okay. All right. And that's common. So the only thing is I do have a great zero down grant program that's out there right now. In fact, it's my favorite program to work with. That one will actually use your income-based repayment plan. Okay. But they will not take zero. Okay. So what you have to do is just, and you don't have to do it now. Okay. Let's work on the rest of the things first. But just later on, what we'll do is we'll ask you to contact the servicing company for your student loans and tell them you're applying for a mortgage, that you need to have some type of payment. And they'll come back and go, okay, make it $10 a month. Okay. So I just had to do that with a lady, very similar situation. Her student loans were in the 40s and she was able to get $10 a month. The mortgage company took that and they just used the $10 a month to calculate inter debt to income ratios, and she was approved, no problem. Okay. It can be, and it makes sense just from a ease standpoint. I don't know with the interest rates way they are. I would check and see what interest rates you're paying on the ones that you have, and then possibly put them together. I probably wouldn't. Well, I would do that at the same time you're doing, maybe switching over to that $10 a month one. Okay. I mean, ideally, you want to try to get the lowest rate possible and maybe consolidate them all together and try to get a payment plan that's going to be palatable for you. The problem is with $10 a month, that doesn't even cover the interest on it. So you can imagine, and I'm sure you've seen it. You probably watched those balances go up. So, at the end of a year, if you owed $50,000 and you're at whatever 5% interest, and you're not paying anything at the end of the year, you're going to owe $52,500. Okay, your balance is just going to continue to go up year after year until you start, paying down that interest a little bit. And I'm not suggesting to do that now. I mean, obviously, we need to get a roof over your head first and get that part. This is just my opinion. In my opinion, I would get that part nailed down first, because what I see in the rental market and what they're forecasting for the rental market, it's not pretty. So, and I think you were having problems last night with your sound on the other webinar, but right now the average 2-bedroom apartment in the Detroit metropolitan area, and this goes for the country, is just hit $1,350 a month for a 2-bedroom apartment. And they're forecasting that to go up 8.5% a year for the next 5 years. So even on conservative estimates, they're saying we're going to be looking at $1,700 a month in 5 years for a 2-bedroom apartment. So that's why I do these webinars, and I preach to no end that the sooner you get a roof over your head, and it may not be your forever home, but it's best to start somewhere and lock it in and not be subject to these ridiculous rent increases that I hear on a daily basis. Not to mention the quality of the rentals is deteriorating too. So that's another topic. But anyways, didn't mean to go off on a tangent, but with student loans, so it sounds like we've talked about the forbearance. Deferred student loans are when people are still in school and they defer those payments to graduation, or at the time that they want to start making repayments. Sometimes if somebody's in a default on their student loans, you can get a really big bounce by pulling student loans out of default, making those payments for 90 days, get a payment arrangement on it, and get that flipped over to a positive. So I've had some pretty incredible results for properly handling student loans that are in default. So not that applies to you, but I'm actually recording this, so I'm going to save this for other people as well. So the next item I want to touch on are repossessions. By chance, you don't have any repossessions in your history, do you? Okay, so repossessions are becoming more and more prevalent. Right now, the 30-day default rate is for automobiles. It's just a number that I follow back from my old mortgage days. That's a good precursor to where the mortgage world is going. But right now, the 30-day default rate for auto loans is just hit 2008 numbers. So there is a tsunami, a big wave of repossessions on the horizon right now. So as a result, a lot of people are going to be saddled with repossessions. Now, that being the case, I always tell people it may not be, and especially with people co-signing. A lot of people co-sign for people that didn't make payments, and those are having to be dealt with as well too. So anyways, if the balances are low enough, obviously you want to try to pay it off. Sometimes that's very challenging or may cut against the grain for what some people feel they should do, because sometimes if you co-sign for somebody, it's painful being hit with that bill. So I always tell people on case-by-case basis, it may be a good idea to try and come up with some payment arrangements. If we do have payment arrangements on a repossession, we can factor that payment in and not have to pay the debt off, and then get you approved for a mortgage. Okay. Then what you do with that payment or bill after you get the mortgage is up to you. Okay. The next thing I want to focus on are bankruptcies. Okay. There's Chapter 7 bankruptcies, Chapter 13s. Have you ever had the misfortune of having to go through either one of those? Okay. All right. So Chapter 7 is just when you wipe the slate clean. Okay. So for that, we need to have the bankruptcy discharged at least 2 years before we can do anything. Okay. So it isn't, I always tell people, once, if you ever hear of anybody that does a bankruptcy, it is very important to build that credit right after the bankruptcy. And it can be done. There are several tools out there. So it's not uncommon. Once somebody does a bankruptcy, you are getting an absolute clean slate. So if you start building credit a month or two right after bankruptcy, it's not uncommon for me to see people with credit scores in the mid 700s after a couple of years by building a couple lines of credit. Okay. Chapter 13 is when you reorganize. What that is, you're taking all your debts, you're totaling them all up, and you're settling with all of your creditors, and then making payments back to those creditors through a trustee that's appointed by the court, the bankruptcy court. Okay. Now, for a Chapter 13, you can actually do something 1 year after you've entered into a Chapter 13 agreement, provided all your payments to the trustee have been on time. Okay. I'll leave that bankruptcy there. Collections. This is the big one that I think that trips most people up. Now, when it comes to collection accounts that show up, and this could be collections for maybe not medical, because medical doesn't affect your credit nearly as much as it used to, but there are medical bills, all kinds of reasons for collections. I always tell people, if the collections are over 2 years old and you're applying for a mortgage, do not pay them. Okay. If you do pay a collection that's over 2 years old, what's going to happen is your score is going to go down. So think of it this way. You're basically reactivating it. Okay. So if you have a collection that's 3 years old, and common sense, because I did this, but this was before there were credit scores when I got my first mortgage. But I went back and I paid all those little, back then the medical collections, just from having 4 kids, were kind of nagging. So I had a couple of things that were out there that I paid to make them go away, and so I could get my first mortgage. But nowadays, if you pay those off, it's going to show up as collection paid, where are we at? March 2023. So it reactivates the old collections, and your score will temporarily go down for about 90 days. And then after the 90 days, it'll start to go back up and go a little bit higher. Okay. So it's kind of misleading what happens with collections. Now, if the collection is medical, I tell everybody, just leave that alone. Okay. They're not hitting you hard for medical collections at all. So don't touch those. If there's anything 1 to 2 years old, we need to talk about it. Okay. And we can actually run that through certain simulators to tell us how big of a benefit will we get if we pay it off. And a lot of times we don't get that much benefit from it. So I say leave it there. And then what may happen is the underwriter, that's the person that approves a loan, might say, you know what, I see an old collection from a cable company out there. I want that paid off. Okay. So imagine when you go to apply for a loan, they're going to pull your credit. And once they have your credit scores, if they qualify, your scores are now locked in. Okay. So if we run you through the mortgage process and they approve you subject to paying off this old cable bill, we don't care if you pay it off and your score goes down because we've got it locked in for up to 90 days. Okay. So that's why I don't like paying those collections off until we get a good handle on what the outcome is going to be from doing it. Now, if the collection is fresh, and I mean 90 days or less, those, if you pay those off, your score will probably go up. Okay. Because the algorithms believe that, oh, wow, John honestly made a mistake, didn't realize it. When it came to his attention, he paid it off right away, and your score will go right. Maybe not go back up to where it was, but it'll go up quite a bit. Okay. If it's over 3 months to 1 year, those are other ones we want to do on a case-by-case basis. Okay. So those are the 4 things that typically trip a lot of people up inside the mortgage world. All right. Where are we here? Okay. Now, how do we get the credit up? So I want to focus on my steps. Whoops. Get right over here. Here we go. These are the steps that I look for, my 60-day steps for 60 points. So the first thing I always coach people on is get a copy of your credit report. You can get a free copy at annualcreditreport.com. I like working with a credit company called Credit Hero. The reason is I do free credit audits for people. Okay. And what that is I can actually send you a link where you can sign up for a account with Credit Hero. Credit Hero will give you a free copy of your credit report, and they'll give you all 3 credit scores. Okay. They do charge you $1 to do it. Okay. Then if you do not cancel that Credit Hero within 7 to 10 days, they charge you $20 a month to monitor your credit, things like that. It's not bad. It's a good thing to do if you're trying to get your credit turned around, but just the same, for that reason, I like Credit Hero a lot. Now, we need all 3 credit scores just to determine which scores we want to really focus on, or which reports we want to really focus on. Okay. So remember, we're going to take the middle credit score and the high credit score. Either way, the 2 scores that we want to try to get the biggest bounce out of. Okay. That the 3rd score, the lowest one, will naturally kind of come up, but it doesn't matter for us. We're focusing on that middle one. Okay. It's very important that we understand the credit profile and what is driving those low scores. Is it late payments? Is it because of collection accounts? Is it credit utilization? We want to understand what's doing it, or maybe it's the fact that it's a thin credit profile and we had 1 late payment. Okay, so the more we can understand it, the more we can introduce the solutions. Okay, we do need to have at least 2 or 3, preferably, trade lines, and a trade line is just a line of credit. Okay, so we need to have 2 or 3 trade lines on at least 2 of the high credit score and the middle credit score. Okay, a trade line is like a credit card, auto loan, things like that. Okay, what we want to do is, well, you see, we want to take that credit. I typically run it through a credit auditor and simulator to verify what the best possible outcome is and how to introduce value. Okay, sometimes it could be paying debt. So, for example, the way that you paid, I start stacking these points up. So you started out by saying you paid that one account from $900 and something down to 70. I'd be surprised if we want to see where does that account report to? What credit bureaus? If it's on your highest score and your middle score, great. We know that there's a high degree of likelihood that your score is going to get a good 30-point bounce out of that maneuver. Okay. So now if you're at 550, you're up to 580. Okay. Now we just need to focus on one other thing. Are there other things on your report that we can manipulate to get another 20-point bounce? Or do we need to start introducing new credit? You actually were added as an authorized user. Well, statistically, 90% of the time, they're going to report it the way that we want. So do you know do you have any idea what was the balance on that $25,000 card that you were added to? And how long have they had that card? Okay. So you're maybe an 8% utilization. So you're really low there. The, op- the open date. I have a feeling, I mean, anytime somebody has a card that has that amount of available credit, and here's another thing, and I don't mean to pry. How old is the person that did it for you? Oh, okay. Well, she needs another bestie. I'm out here. So because so anyways, chances are she's probably had that card for more than 10 years. So you probably get some increased credit juice from that, in my opinion. So I'd be surprised if you don't get another 30 to possibly 40 or 50 points out of that maneuver. Okay. So those two maneuvers, if you were at 550, could put you above a 600 in a very short period of time. I mean, within 30 days. Okay. And now, if you need, the only thing I could possibly recommend would be maybe if possibly adding another trade line. Okay. Whether you add another secured card or a secured loan. I wouldn't add another authorized user. You've got that. I probably do you, that $1,000 limit, is that a personal line of credit or is it a credit card? And who is it through? Navy Federal. Nice. Okay, I, I think they're one of the few organizations that report to all three bureaus. Um, okay, so you could pick up you could pick up a secured card. And what I look for sometimes is if you have a personal line of credit and then a credit card, you're starting to get what they call credit diversity, and you get a little bit of a lift from that. Not a lot, but a point or two. And when it comes down to it, a point or two can sometimes make a difference. So I hate to say it, it's like if the program's a 600 requirement or 600 credit score and you come in at a 599, there's no flexibility. That's a hard line. Okay, so maybe picking up a secured card wouldn't be all that bad. There's one company I'm going to recommend in a few moments that offers. It's a local credit union by the name of Michigan First Credit Union. I don't know if you've ever heard of them, but I think they do a fantastic job servicing the the people that need it. Okay, so I've been a member there ever since I discovered them about 5 years ago, and I love their services. Well, I'll tell you, I love what they do for people. I don't like having to call them. That's the only thing I don't like because you can never get a hold of anybody. You always have to go to the branch to get something done. But it's just they're overwhelmed. They're busy. So I certainly understand that, and I always recommend them. So now, if for any reason after 30 days with the two maneuvers that you've done, if you don't see a huge bounce, I'd be shocked. But the next step might be to possibly, and I'm not suggesting this for you, but sometimes if people have credit scores in the low 500s and they're saddled with credits or late payments or things like that, sometimes sending out dispute letters helps quite a bit. Okay. So I'm not suggesting that in your case. I don't think the juice is worth the squeeze, as they say. I think you've got a great handle on things, and I think you're way ahead of what I usually coach people with. So I have a feeling within 30 days you're going to be in a really good spot. Now, once you get your scores up above a 580, I would be very comfortable connecting you with a lender to get a pre-approval. And even though the scores might not be there, they can maybe help take that conversation and confirm what my thoughts are. And I have a couple of lenders that we work with so many people, and we're so familiar with what it takes to get these scores up. They'll issue a pre-approval even though our scores aren't quite there, knowing that there are certain things in motion that will get you there within 30 days. Okay. Not knowing what your housing situation is, if you're not under that type of pressure where you don't need to move tomorrow, then we just might want to take our time too. Okay. So yeah, fire away. Mhm. No, you'll actually see your score go up. The secured cards, typically, I'll see a score go up about 20 points in about 30 to 60 days. And then after 60 days, it could go up as high as 30 points. The key is we want to keep that, once you get the card, is you got to use it. Okay. But try to keep that balance down, not at zero. Just try to keep something on. I always tell people, go, use it for your gas and pay it off, or maybe not pay it off, but pay it down to about $10, $20. I find that paying it down to zero, it doesn't give you as high a score as if it has like a $10 or $20 balance. So that's just my own personal experience, and I've had a few people echo that. So, but Michigan First has a very good secured credit card. They also have a secured loan. I'm going to touch on that in a few minutes. That's actually one of my favorite tools. So, but I don't know that you need it because you already have that personal loan with Navy Federal. But anyways, let me go over the do's and don'ts. Okay, so we talked about ideally we want to make sure that you're signed up for a free, a credit monitoring service. I like Credit Karma, I like Credit Sesame, and I like Experian. Okay, Credit Karma will give you the Equifax and TransUnion credit score, and Experian will obviously give you the Experian score. It's nice to have all three. Okay, just so you know what you're looking at. All right. Any credit cards or limits, we want to reduce those below 30%. Pay the credit cards down. Please don't pay them off. Get added as an authorized user. You're already one step ahead on that. Open up a secured card or a secured loan as soon as possible if you need that. So I'll touch on that right now. So the secured card, are you familiar with what they are? Okay, so what it is, you basically are going to give a credit card issuer a deposit. So for example, at Michigan First, right now, someone told me they just bumped it up to $675. But if you give them $675, they're going to give you a credit card with a $500 limit. Okay, it's important that you use it. Try to keep that balance below 30%, which would be $150. And you're going to see in about 30 days, it's going to show up on your credit, and then you're going to see probably a good 20-point bounce in your score by the time day 60 rolls around. Okay, it's not uncommon to get people to get a 30-point bounce out of it. Okay, that's one tool that they have. The other tool they have is a secured loan. All right, this tool I like the best. I've had people get 60, 70-point bounces just out of this one tool over 90 days. Okay. In 60 days, you're going to see your score go 30 to 40 points by this tool. What it is, you give them $525, okay? They're going to take the $25 is what they charge to do this, but they're going to take the $500 and they're going to put that in a savings account and lock it down so you can't use it, okay? So when you go into your accounts, it's going to show you got 500, but you just can't touch it, all right? Then they're going to give you a loan right away. They're going to plop $500 into your checking account. Okay. Now that money's yours. That's the loan. You're free to use it, but keep in mind you got to pay that $500 loan off over 6 months. So they're going to take 80 something dollars a month out of your checking account to pay that loan off. Okay. And then at the end of 6 months, once that loan's paid off, they release the $500 in your savings account. Obviously, you get that back too. Okay. The key to this program is when they report it to the credit bureaus, they're reporting it as a personal unsecured line of credit, which is one of the hardest things to get. That's why your score goes up so much. Okay. And they report that to all 3 credit bureaus. Okay. So I've had people most people are going to get a good 40-point bounce in their credit within 60 days of that maneuver. Over 90 to 120 days, I've had some people go up 50, some people go up 70 points from that particular. Now, every now and then, when I refer people to Michigan First Credit Union, they go in, and most of the people, they're not tellers. They're business managers, I guess, in their business department. They'll tell you, oh, you don't need the secured card. Just do the secured loan. That does wonderful. It's great. But I always tell people, just, be insistent. If you think you need both, be insistent on getting both. Okay. They're very good at what they do, and they know it will affect your normal report. I'm telling you how it's going to affect the mortgage report. Okay. So they're just different algorithms. So every now and then, I just had somebody the other day that had to go back to there and be insistent that they pick up the secured loan, because when they pulled their credit, it was showing a lot higher than the mortgage scores were. But that's because they had a thin credit profile, and it could be more volatile. Remember, we talked about that in the beginning. So anyways, I appreciate everything that they do, but sometimes we just need to be insistent with regards to opening up certain things with them. Okay. Now, you don't need this, but sometimes if people don't have any credit, we can build a credit profile by gathering alternative credit. Okay. So if, for example, someone has no credit scores and no credit at all, we can gather 12 months bank statements or 12 months statements for car insurance, cell phone bills, subscriptions. We can get those statements, show that they've been paid for 12 months through bank statements, and actually have those items added to your credit report to create a credit profile. Okay. This only works for people that have no credit. Okay. If someone has bad credit, it's not going to do anything. We can't use this to offset the bad credit. Okay. They really have to have 0 things on there. Okay. And then I always tell people, if we have it's better to set up those payment arrangements as soon as possible. Okay. The things not to do. Okay. Do not apply for any new credit. Don't blindly pay off the collection accounts, and then collection accounts over 2 years, we want to leave alone. And, I know we went over this a few times. Less than 2 years, case by case. Don't touch the medical. Collections 1 to 2 years old, we want to run through a simulator for you. And collections 0 to 1 year, we need to address on a case by case basis. Do not pay off credit card balances to 0. Don't pay off loans. Don't become an authorized user on a new account or an account with late payments. Okay. So I've had someone in the past that, hey, my wife just got a credit card. She added me as an authorized user. That's great, but we didn't get any benefit from it. It actually went down a little bit. Okay. So because it was a brand new account. So the algorithms are becoming very, very smart, and it's amazing how much artificial intelligence is entering our world right now. The other thing I have to spell out now for people is, please do not employ debt consolidation services. Every now and then I get someone that does that. So, and they're starting to surface now as a result of the economy switching. Okay. When the mortgage world looks at debt consolidation companies as if you were doing a bankruptcy, a Chapter 13 reorganization. Okay. So if you ever hear anybody say they're considering that, I always tell them, you know what, if things are to that point, I would seriously think about bankruptcy. Okay, because to do the debt consolidation services, basically those guys are just collecting your payments for 6 months before they start to dispersing your funds where they need to and negotiate. I just find you're better off just doing bankruptcy rather than do that, because you're going to be treated the same as if you were. So you might as well get the benefit of that bankruptcy protection. Okay, so just my own personal input, not for you, but just kind of pay it forward thing if anybody ever run across that mentions it. Okay. The next thing I want to cover is talk about secured cards. You can pick those up at a lot of places. Credit Karma offers a few. I would almost consider a Capital One has a good secured credit card too. Okay, so I don't want you to think, I might actually consider that before Michigan First. Okay, love Michigan First, but they're asking for $675 for a $500 limit. You can go to Credit Karma, pick up a Capital One card for $300 with a $300 limit. Okay, so I'm sure you understand what they are. You give them a deposit, they're going to give you a credit card. Once you receive it, it's important you use right away. With that, you'll see a good 20 to 30 point bounce in 60 days from that maneuver. The secured loan, we talked about that. Michigan First is my favorite go-to for that. That will give you a good 40 to 60 point bounce in your score in about 45 to 90 days. Okay, I won't go over how that works again. And then I think it's important that you pick up credit monitoring services. Like I said, Credit Experience free, Credit Karma is free, Credit Sesame is free. Okay, they'll each give you your scores. They don't really give you a good comprehensive credit report. So I always tell people, if you're really serious about attacking this and you want a free credit audit, I'm happy to do it. So I always tell people, please just contact me directly for that. Actually, I'm going to put in my cell phone number in the chat room here, and I haven't been doing that. First thing I want to do here before I forget, Kiana, is this, and I know you took advantage of this earlier today because of the, because we spoke, but if anybody ever wants to book a call with me, this is a link to my calendar. Okay, so no down payment required.org/book. So let me enter that into this other chat room here. All right. And the next thing I want to enter is my phone number. That is 248-252-7283. Always happy to chat with people. I tell you, I am a phone jockey. I spend a lot of time on the phone. So if I don't answer, please leave name and number, and I'll get back to you as soon as possible. Or just text me your name, what you're looking for, and I often have breaks between calls. Happy to go back and return your call in between calls. Okay. So, and there is my cell phone number as well. So in order to do the free credit audit that I offer, let me send you a link to the Credit Hero. Okay. So what I would do is schedule a call, just need to ask you a few questions. I'll send you a link to Credit Hero that allows me to see your credit report and credit scores and run it through the simulators that we work with. And then we can chat with what's going to be the best way to address paying down certain trade lines, whether to pay collections off, or who knows, maybe we need to fire off some letters to the credit bureaus. Maybe there's some inaccurate information and low-hanging fruit there that we can challenge. That's also something that's done very easily that we can do as well. Okay. So any questions on any of these companies that I have up here, Kiana? Okay. All right. Credit restoration services. This is something that these are one of the big reasons that I started doing the credit repair for people a couple of months ago. the credit restoration industry. I do appreciate the services that they do and that they perform, but they are, in my opinion, more one-trick ponies. Okay, they are constantly, their goal is to challenge things with the credit bureaus on your behalf. Okay, and that's great. It's great to do that, but I find that a lot of people put all their weight in that. So most of the people that I work with that subscribe to these services uh, end up being with them for 6 months to a year. Okay, if you are with these companies more than 6 months, you're something's wrong. Okay, most of these things can be done within three, maybe four waves of letters that might take about 45 days each. Okay, so and they're not cheap. Okay, just the mid-range services from Lexington Law is about $100 to $140 a month. National Credit charges $100 a month. I mean, I do the same services. I actually don't charge people. I mean, I do, but once somebody buys a house from me, I refund all of that. But in many cases, if it's just one round of letters, that's going to take care of things. I don't even charge for that. It just depends on how in depth it is. But for the most part, I find that just by sending these letters out, you're only going to be able to push people's credit scores up to a certain level. So just picture this. If somebody has a lot of negative things on their credit and we consistently send letters out and challenge that, I find that a lot of people stall around that 580 mark. Okay. The key in my mind is you got to build new credit at the same time as you're fighting the old stuff. And then you're going to increase those two maneuvers are going to increase your chances 3 times to get where you need to be in a shorter period of time. Okay. So, and I don't say this for you, Kiana, because you're in a really good spot, but it's very, very important that if you are working with these companies right now, which it's great, it's a great first step to take. It is a little bit more expensive than I would recommend, but you need to build credit in addition to disputing the old things. Okay. So with that being said, where do we go from here? I always tell people, please take advantage of the opportunity that I'm offering here. Call me, schedule a call with me. Happy to go over your particular credit situation and tell you what I would do if I were in your shoes to get your score where it needs to be in order to qualify for a lot of the programs that I help connect people with. So for those of you that are watching this, I specialize in connecting home buyers with down payment assistance programs and grants that are out there. So most of the people that I work with can end up buying a home with just a few $1,000s out of pocket. So I do those webinars every Wednesday at 7 p.m. So please don't hesitate to reach out to me or schedule a call. I'll be happy to send you a link. Actually, I will put a link in this right now. The link to my webinar for, okay, let me get in here. Sorry, I should have had this available for people. Okay. Copy. And here it is. No down payment required. .org. This would be the link to register for my next webinar. Okay. All right. Apologize for going off there. Kiana, what questions do you have to wrap things up? Okay, so a charge off is going to be, chances are it's probably a collection, okay, is how we want to address it. So how old are they? So if it's a charge off, that's a derogatory. It just means that the lender has charged it off their books, and chances are they're going to sell that asset to somebody else for collection. Whether they've done that or not, I don't know. It sounds like you don't have it showing it up. But we want to see, when was the last reporting date for that? $2020. Okay. 2020. Okay. And so there are just two of them, or is there a third one? September as well. Okay. All right. So, boy, unfortunately, you had some big setbacks with COVID there. Um, okay. So, what are the amounts on each one of those? 7,400. Okay. All right. So those are some big ones. Those are going to have to be dealt with. Okay. So, my okay, and that could very well be the best option. Now, I would work on, let's getting the rest of the credit resolved. And then right before we're about to start getting things in motion, for you, we might have to work on pushing your score up in the 640 area. Okay. Some of the one program that I was thinking of at 600 is probably going to have issue with those being as big as they are. The program through the state is a lot more flexible. If you're 640 or higher, you're in. Okay. So, mhm, okay. That what you sent earlier? Okay. And that happens. So, okay. All right. Got it. So what we probably want to do is we want to get your scores up. We still want to stay the course, okay, and see where we are in about 30 days. Now, my thoughts are we're probably going to want to get payment arrangements with each one of those three, okay, whether it's $100 a month for each one, anything just to, and we want to do that before you apply for a loan, okay, because then it looks like you're proactive, okay. I wouldn't do it yet. And the reason I wouldn't do it yet is once you contact those companies, they'll be all over you to get some payments going, and they'll be relentless contacting you. So I would say let's give it a few weeks and see how that authorized user account and how paying down that card affects your scores and how high those scores go. What's your time frame for a move? How quick did you need to be in a new place? Okay. All right. So I'd probably do that. I mean, there's no reason. I mean, if you were telling me that your lease is up in 60 days, then that might be a different story. Then I'd say reach out to them and get some payment arrangements. But right now, I'd probably just hit the pause button because it sounds like there's been no communication with either one of those companies for a couple of years. Okay. Now, I did actually have someone last month that actually had a large repossession that was charged off, and they snuck in on one of these programs. They were not asked to pay that large charge off. First time I've ever seen that happen. So now, before last month, I would have told you it was impossible. So the fact that it came back that way, I guess now anything's possible with charge offs. It really depends on how your overall credit and where your score is with regards to how the desktop underwriting software is going to treat your particular file. So that was in fact an FHA loan. So I was kind of impressed when that happened. So anyways, I would just table that for now, but just understand that you might have to contact all three of those companies and maybe get payment arrangements. I'm just guessing maybe $100 a month for each one of those would pass the smell test. And but I don't want to paint it as a minimum amount. You're talking about committing to $300 a month. So that do you have an auto loan now? Okay. So how much is that auto loan? Oh, okay. Got it. So how much are the payments on it? Okay. So, you've got 470 plus 300 is 770. Okay. So, I mean, it's still a manageable amount, but it's a lot of money when you got to pay it on a monthly basis. So I want to keep that clearly in mind. But I would definitely I'm going to put you down for a call in about 30 days, or if you get an update with regards to how that authorized user hits your credit and the how much of a lift you get for paying down that personal loan, I'd be interested in hearing. Okay, good. All right. Any other questions? Yeah, I would say we need to get you up to a 640 because the state program is going to give a lot more clarity for you. Okay. Though it might work with the other ones, but I'd rather have a couple of options for you than zero. And it sounds like you might be in a little bit better spot than we originally thought. Okay. But we'll definitely know more in the next 3 or 4 weeks. Okay. Yeah, if you'd like to do that for sure, why don't you jump in you have a link to my calendar still? Yes, if you could go ahead and do that, and we'll do that right. We can do that credit audit right during that call. Okay, so if if you could schedule a call for tomorrow, that'll allow me to get you input in the system, and then I have to email you the credit hero link. Okay, and then we can start it that way. Okay, it may take 2 sessions to kick that off, but might not be a bad way to see where things are and confirm, because you're getting drastically different scores from two different models. So that's a little concerning, but it's not unusual. But once we do the credit audit, we'll be able to tell. But the unknown variable is where are things going to be once that personal line of credit shows getting paid, because you took that utilization from 90 something percent down to 8%. That's a big decrease. So and then obviously the other one, the authorized user. How long ago did they add that? Was that just? Oh my gosh, you should be seeing results on that already, or if not any day now. Okay, so yeah, so you hit it at the wrong time. So it's probably going to be it could be up to 50 days after that if it was right after a report date. So okay. All right, good. Well, I'll look forward to speaking to you tomorrow, and we'll pick it up from there. But thank you very much for attending this evening and allowing me to do this webinar so I can record it and start sending it out there. Okay, good. You're welcome. Enjoy your evening. Thanks for attending. Okay, goodbye.